What's going on, guys? It's GBP baby. Welcome back to another weekly review and outlook. I hope everybody's doing well, and let's get straight into things. So we're going to start on dollar as per usual, and you'll see that this is our monthly candle right here. We are slowly creeping towards the end of March, and I just wanted to bring our attention to the fact that we've traded to the 50% level of this bullish order block. You can see how we just mohawked slightly off of that, and then we've had a strong reaction away, and we've also now traded above the 50% level of last month's wick. Now, the fact that we've traded above the consequent encroachment, which is 50%, is very significant to me, as again it suggests that we're likely going to continue to see a bullish push upwards. So I'm just going to get that marked out for us, like so, and I'm going to make that dashed, and this is actually going to be the lowest I want to see price trade for me to remain bullish on dollar with the expectation to trade higher. So yeah, just make sure you take a look at the fact that we've taken out sell stops that was residing below February's low, and we've traded up above again that 50% level, that consequent encroachment, showing very strong price action and bullishness. If we drop down to the weekly, we'll also find that we've traded down into a weekly bullish order block right here, and if we are bullish, as in if price is going to continue higher, we can now describe this as a propulsion block. So we should anticipate this kind of move away from this propulsion block with the expectation to start running for premium PD arrays. So now that we're on the weekly, we need to start finding weekly PD arrays that we want to see get traded to this new week. Now, mind you, we do have very high impact news. We have interest rate announcements and some other news all throughout the week. I think Tuesday, Wednesday, Thursday and Friday we have high impact news. So we can expect a lot of volatility, but overall I'd like to see an up close candle, like an up close week. We have this fair value gap right here, but I'm not going to draw our attention to that because I anticipate us to trade to that anyway. What I am going to bring our attention to is up here, and what you'll find is there is an implied fair value gap. So between this open and this open right here, this is all an implied fair value gap, and that's because we only have delivery on the downside in terms of volume. So you can see there's only down close candles here. So I do believe price is going to seek to want to trade up into this range. So if we go down to the daily, in fact, let me just get this written out as weekly implied fair value gap, like so. And then again, you can see the midpoint of last month right here, and this is going to be the lowest I expect price to trade in the new week. So I'm going to get that marked out. So let's go down to the daily, and you'll see again a bearish order block on the daily, which I'd like to see price trade to, and a fair value gap just below here. Now, because we're so bullish and because of how aggressive the last move was, I wouldn't be surprised if price ran straight towards this weekly implied fair value gap. And what I mean by that is that Monday and Tuesday we very may well go and create the high, and then we'll see some kind of retracement back into this fair value gap right here. So although there is a fair value gap in discount, you can see very bullish price action, and I do believe price is going to seek to want to fill either this imbalance first, so trade up to here first before we see some kind of retracement, or like I said, completely trade into this weekly implied fair value gap first before we see some kind of pullback. So Monday and Tuesday I am quite bullish, and we could actually make the high of the week, and then we get a retracement, especially with non-farm payroll. A lot of manipulation is likely to occur, so that's something to consider. So I'm probably going to stay out the charts on Monday just to see how we trade, and like I said, if we do manage to reach up here, then I'd simply start looking for shorts on dollar with the expectation to run back down into this range right here. So what am I looking for? Moving into tomorrow, again, I'm looking for this level to get traded to. This is also our breaker level, high, low, higher high, and then price is delivered to the downside. So I do want to see how price trades through this. Preferably we ignore the breaker, which is technically here. Preferably we trade through it and go straight to the implied fair value gap, because again that would signal bullish prices, but we very well could turn at that point. So that's what I'm going to be looking out for tomorrow. If we go to the 4 hour, you'll see again implied fair value gap up here, and you'll see a nice 4 hour fair value gap is formed right there. So in terms of targeting, I'd like to think that price will try its hardest to get up here. Again, early in the week I wouldn't be surprised if we saw some kind of continuation of the expansion we've been witnessing to get up there, and then I'll be expecting lower prices with an expectation of some kind of retracement. Another thing to take note of is this bearish candle right here, the fact that we were selling here, so smart money was distributing right here means that they're likely going to be accumulating here. So we can drag this out, and you'll see how it came into that, and we're continuing to respect that, which is what's telling me that price, that they may well be accumulating more positions, pushing price higher, again sending it towards the fair value gap that it's targeting before we actually see some lower movement. So moving into Monday, I do want to see another up close day, simply buying below the open with the expectation to reach for this bearish order block and potentially into the weekly implied fair value gap. So that's my outlook on dollar. I hope that all makes sense. And yeah, generally speaking, I wouldn't be surprised, and I'll just get this drawn out for us with the path. I wouldn't be surprised if price made a high, came down midweek, made some kind of low, and then continued to trade within inside the range. So this is how I'm, framing the week so far. I doubt we're going to start retracing anytime soon, especially since we haven't completely filled in this imbalance. So I'm just going to be watching tomorrow to see how we trade in general. Right, so that's all good. Let's go to GBP USD, and we're going to start on the monthly. Get rid of these, and I'll show you exactly what I'm looking at here. So we traded up into this level, which is a rejection block, and you can see we've just keyed off of that level, which is nice to see. And again, of course, I'm going to have some kind of target, some limit on what I expect price trade to. So I am looking at this wick from the month of December, and what I'll do is I'll drag this out. And the 50% level of here is the highest I want to see price trade for me to remain bearish. So moving into the new week, once we get to the weekly, we'll be watching this level to see, okay, how does price treat it? It should find resistance if we are going to be trading lower and start reaching for this fair value gap. So let's get the midpoint of this wick marked out more clearly for us. Like so. So that's the midpoint of December. We can make that red. And now we know when we drop down to the low time frame, this is the very highest I want to see price trade if we're going to be trading lower. We can go to the weekly now, and you can see how we traded right through that range beautifully. And now again, I'm watching these lows down here with the potential reach for this south side liquidity below here and here. But first, there is another implied fair value gap like what we identified on the dollar, and that's between this open and this close. So this is an implied fair value gap. Again, why? Because there's only deliverance on the upside. So I do believe price is going to seek in the new week to trade into that. And like I said, it's very well and probably will reach for it very quickly. I wouldn't be surprised if Monday opened and we were just trading lower to reach this fair value gap before we saw some kind of retracement or reversal. So let's get that drawn out. You'll also see there's a nice implied fair value gap inside of that fair value gap right here. So that's quite interesting. If we go to the daily now, we'll see that fair value gap down here, which is a bullish order block, and a fair value gap just above it. So I do believe price is going to continue to the downside on a daily basis, run lower. And once we do reach here, if we reach here before we trade higher, then I'd start looking for longs on the pound with the expectation to withdraw back into the range it's going to create on the way down. So that's something I'm paying very close attention to. We can go to the 4 hour, and you'll see that midpoint on the monthly that I drew our attention to, that consequent encroachment, lines up nicely with this fair value gap. So again, price may trade to it, but it probably won't do it until later in the week. So again, Monday, Tuesday, I'm looking to see some kind of low form, and you'll see again slight fair value gap right here that price may want to reach to. And yeah, Monday should be interesting. This is going to be a very interesting week, guys, especially with non-farm payroll. You'll see there's a breaker here as well, low, high, low, low. So price might return to this, find support, and then want to trade back into that range. But I'd prefer to see price fail to trade back up here until we've dug deeper into discount. And what I mean by that is, if we look at this range from this low to this high, you can see we're just consolidating at that midpoint. So I'd like to see us at least reach to this level before we see some kind of retracement back into the range. Hope that's making sense. And finally, last but not least, we can go to euro. We'll start on the monthly on euro as well. And again, euro's taken out last month's high, very nice to see. We also traded to 50% level off this bearish order block right here, and we've just come off that, which is cool. And then yeah, we'll go to the week. We'll go straight to the weekly here. We traded into a bearish order block here, so that's acting as a propulsion block the same way we saw on dollar. And in terms of fair value gaps, yes, we have a fair value gap right here, but I'm expecting that to get traded through anyway. So now I'm looking at this implied fair value gap as a target. So I'd like to see last week's low get taken out. So this is the fair value gap on euro I want to see get traded to in terms of targeting. And then if we go down to the daily, we can start looking at the highest point I'd expect price to trade. So here is that fair value gap coupled with a bullish order block. Again, very high probability in terms of looking for or expecting some kind of reversal at this point. You can see we had a nice break to the downside with this mitigation block. Again, Monday, Tuesday, I'd like to think that we do continue lower, just because I think it's going to use that to like manipulate people into thinking we're going lower, maybe reverse it midweek. I think it's going to be an interesting week. And then we have a daily implied fair value gaps right here as well. So there is a lot of imbalance down here. So I do think price is going to draw down there quite quickly. In terms of the highest I want to see price trade, we do have a mitigation block, high, low, lower high, we've broken down. Now this is the last down close candle right here, so that's the very highest I want to see price trade. But like I said, I doubt we're going to even think about trading up there until after we've made some kind of significant swing low, when we can target it if that's the case. So that's what I'm looking at on euro. If we go to the 4 hour, we can get a better look, see where we broke down, kind of consolidating, beautiful lows here, relative equal lows below here. So you can see all these sell stops and sell side liquidity residing below here, which is why I believe Monday and Tuesday we are going to see a significant low form, because I think it's in a rush. It's going to be in a rush to get there, and then I'd start thinking about a potential reversal if price wants to show that. We also have a nice 4 hour fair value gap inside of the weekly fair value gap. Again, coupled, when you see couples like this, like a 4 hour gap inside of a weekly gap, again, high probability. So we can draw our attention to this level once we get down there as a potential opportunity for looking for longs, depending on what time we get there. Like we could move down here and then we have like the interest rate announcements as we're trading into it. Then we know, okay, we're likely going to turn around here, look for longs with a potential reach up to this mitigation level I was talking about. So that's my expectations moving into the new week. Should be quite interesting. Probably going to stay out the charts on Monday. It really depends though. If Monday shows a willingness to want to trade lower, I might get in with the expectation, you know, to run for the sell side liquidity I'll draw our attention to. But yeah, I'll make sure to make a post tomorrow. So that's going to be everything, guys. Thanks for watching. Don't forget to hit subscribe. Don't forget to hit like. Don't forget to hit comment. Follow me on Instagram at itsgbpbaby. We're nearly at 1,000 subscribers. That's incredible. And also I have dropped a video for all the crypto heads out there, so you can make sure to go over to my channel and check that out. That's going to be everything for now, and I'll catch you in the next one. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So I highly suggest you go and watch yesterday's video where I outlined my expectations for the week as a whole, because I'm not going to be explaining everything in detail again. Yesterday's video was only about 13 minutes long, so you can go check that, and then I suggest you come back here. So here we have an implied fair value gap on the weekly. I brought our attention to that in yesterday's video, and then you can see that today we've already traded into this weekly fair value gap and closed it in as well. So let's drop down to the down to the daily, and you'll see that price closed in this fair value gap, this liquidity void, very nicely today, just as anticipated. I did post a trade execution video, you can go watch that. So yeah, we traded, closed in this fair value gap, and we're just coming off the high of the fair value gap right now, which is right here. And you'll see we also traded up into this order block level, which I also brought our attention to right here. So the fact that we haven't had a strong reaction straight off of it is saying to me that price may want to continue higher. And there is a 4 hour imbalance in this weekly implied fair value gap that I do have my eyes set on. If you recall in yesterday's video, I brought our attention to this small fair value gap right here, and I was stating our price may want to draw up to this. And the fact that we have FOMC this week, I am expecting a lot of manipulation, as in we may see rallying at the beginning of the week, and then we may witness a large reversal. So I'll start speaking about that once we get to the 4 hour, but on the daily, you can I just want to review what happened today. So if we look at the imbalance right here and drag that out, you'll see how price continued to respect that before trading higher. So here's Friday's price action. We traded through it and away from it, and then you'll see that today we failed to take out Friday's low. We traded down to the 50% level of Friday's wick, and I'll just show you that now. So you'll see how we traded to that 50% level, and then we aggressively traded higher, again intending and successfully closing in this fair value gap. So what I might expect to moving into the new day? Well, to be honest, we should continue to expect bullishness as we have that weekly implied fair value gap and a daily bearish order block up here. So I am looking to see price trade higher. But like I said, we do need to be careful with FOMC and everything. So until I'm proven otherwise, as in until I see some kind of break to the downside, I am going to continue to remain bullish. And yeah, moving into tomorrow, I'm going to be watching how we trade around Friday's high. So what I'm going to do is I'm going to mark out the high wick of Friday, like so. And to be honest, if price respects this in the early stages of tomorrow, then I'd expect us to trade higher and run into Monday's high and start working our way up towards that implied fair value gap. There is also a breaker, a daily breaker here. We've got a high, a low, a higher high, and then price is delivered to the downside. So I am also looking at this breaker right here, which we haven't quite traded into yet. So this may be another level that price may be drawing to, but overall I am expecting a continued rally. So let me just make this black, and then let's go down to the 4 hour and we can take a better look at price action. So you'll see how we had a slight consolidation, and then today we came lower, creating the low during London, and then we expanded just as expected into a nice bearish order block right here. We are just getting a nice reaction off that right now. You'll see we traded into that. But if we are to trade higher, then price should continue to respect this. And remember, this is that daily high wick, but you can also see there's a bullish order block here as well. So price is okay to come down, trade into this high, completely fine. But I do expect price to want to run up these highs one more time before we see some kind of break lower. Furthermore, there is a nice fair value gap right here on the 4 hour, so I'm going to get that delineated as well. We'll make this one blue. And then I do want to bring ourselves to some relative equal highs that have formed above this high here. Let's just shorten this. So what you'll find is that we have buy side liquidity now up here. And the reason I'm bringing our attention to that is because there's relative equal highs. A high above this and a high above this swing here as well. So moving into tomorrow, I want to see price run into these highs and potentially trade up into this breaker. Remember, this is that daily breaker I was talking about, and fair value gap. So there's a couple there. And then I'd like to see how price reacts. If we have a nice strong reaction away from this fair value gap, then I'll start looking for shorts for the rest of the week, moving into Wednesday, where we will likely start trading into these lows. But yeah, overall on Tuesday, I want to see us trade up into this buy side liquidity, fill this fair value gap, and if by say New York session we've already traded into this fair value gap and we're seeing like a nice reaction away from it, as in resistance, then I'd expect another New York reversal where we'd see an expansion lower. So I hope that makes sense. Now this fair value gap up here on the 4 hour, although I do anticipate price to eventually trade up to it, as in I do want to see price get up there, the likelihood of us reaching that so early in the week is very unlikely. So that's why I'm just watching this level now, and you'll see how this week I'm starting to stage my delivery. So let me break that down for you. So on the daily, yesterday I said I wanted to see us fill in this fair value gap and trade into this low. Now that's done. So now I'm looking at the next premium PD array as to what price should trade to. So on the 4 hour, like I said, we have a nice fair value gap here coupled with a daily breaker. So this is my next target. Once we trade to that, if price still wants to hang around, my next target will simply be this 4 hour fair value gap, and then we have some beautiful relative equal highs on the hourly resting above here. But like I said, because this is such a high premium, price may not want to go up there straight away. We may want to come to this fair value gap, move lower, grab sell side liquidity below these lows, grab sell stops, and then offset them up here at the end of the week. So that's how I'm looking at the week in general. But moving into Tuesday, all we need to worry about now is watching if price continues to respect this before we trade into that. Once we trade into this fair value gap, and if we see a reversal, then we can start thinking about us trading through these levels and looking for these stops as sell side liquidity. But remember guys, we are still on the buy side of the curve. We should be looking for buy side premium PD arrays to be traded through and to and through. So that's everything on dollar. I hope that makes sense. Now let's head over to Euro USD, and I'm going to start here on the weekly as well. And you'll see how we're trading lower just as expected. Now again, fair value gap, I drew our attention to this in yesterday's video. Go and watch it if you haven't. We have traded into this fair value gap. I'm not really paying much attention to this one purely because I expect to get traded through, and it did very quickly. So this is my target in general in terms of seeing continuation to the downside. So we filled that in, very nice to see. And if you go to the daily, you'll see we traded higher, running out Friday's high, traded into a mitigation block right here, and then price traded away from it and started trading lower. So this is what I traded in today's video, which I dropped earlier. You should go check that out. But this is a mitigation. We've got a high, low, lower high, and then price is delivered to the downside. So once we traded into that, that was a nice shorting opportunity, and you can see how we just closed lower as well. So I am expecting continuation lower. We have relative equal lows below Monday's low and this Thursday low from a long time ago. And then that fair value gap on the weekly is also a bullish order block on the daily. So I am expecting price to continue to push lower and start running into this implied fair value gap that we have right here as well. So this stays in line with our expectation for higher prices on dollar. If we drop down to the 4 hour, we can get a better look at price action. So we traded higher, clear breaking market structure right here. Very nice to see. And then what I'm looking for now is the breaker. Well, we have a high, we have a low, we have a higher high, and then price is broken to the downside. So now this should act as a breaker block, and price may want to trade up into that before it trades lower. Now it doesn't have to do that, and the reason it doesn't have to do that is because we have this order block as well right here. And this is something for you guys to go and study. So the fact that we traded and closed below this bearish candle, this down candle, means that price doesn't need to come all the way back into this range before we trade lower. It very well could just respect the 50% level of this and then trade lower from there onwards, and that's completely fine if it does that. We may see that happen during the Asian session. Sorry, we may see us trade into that and then continue lower, rushing towards these lows. What's nice to see as well is on the 4 hour we have a fair value gap right here that I do believe is going to get traded to. So let's just get that marked out. We'll make this white, and again, depending on how dollar's trading, if we start trading higher on dollar, we want to be looking for shorts on the pairs. Obviously, relative equal lows residing just below here. Very nice to see. Sell side liquidity. And yeah, I'm expecting a bearish day in general tomorrow. So I'm looking for the highs to get made in London or around Asia session, and depending on how weak we are, price should just run straight lower and carry on falling into its fair value gap. Let's go to the hourly just to get a better look at price action. You can see you made a high, a low, a higher high, creating the high of the day, traded lower. So that's why I'm bringing our attention to this swing low and this order block here, as giving us opportunity to start looking for shorts for the rest of the day, or for tomorrow, to run into these relative equal lows. So it seems like quite a clean setup on euro, to be honest. It should be pretty easy going. I say easy going. But yeah, we also have these stops below here, here, and here. So price is going to want to, create some kind of swing likely before we start attacking these lows. But we'll obviously have to wait and see. So lower prices on euro, and we're expecting to see that happen as we can see dollar continue to rally above this buy side liquidity and reach into our fair value gap. But remember, there is potential for us to reach up here depending on how bullish we want to be. So yeah, tomorrow should be very interesting. And remember, we do have we do have FOMC on Wednesday. So this kind of manipulation in terms of seeing us rally one way and then seeing a big switch midweek is nothing irregular for price. Like, this is all behavior we're used to. So I'm going to finish on GBP. That's interesting. I usually do GBP second, guys. And you can see GBP, there's bullish order block here. And you'll see GBP hasn't quite traded into the fair value gap that it has yet. So I'm looking at this bullish order block right here to get traded down into as a target on the weekly. If we go to the daily, you'll see how we fell lower today. Very nice to see. There is a daily fair value gap right here. We tapped into it, didn't quite fill it, and that order block on the weekly also lines up with an implied fair value gap right here. So that's very nice to see, as in I would like to see price trade into this level moving into tomorrow, as I believe we're going to have continued delivery to the downside. So I'm watching this fair value gap tomorrow, and we can drop down to the 4 hour, and you'll see how price is continuing to respect bearish PD arrays. So we have a bearish order block here, traded into it. What happened? We traded lower. We have a bearish order block here, drag that out. What happened? Traded into it, traded lower. We have a bearish order block here. So what should we anticipate? We trade into it so that we can trade lower. So you can see our price is continuing to respect bearish PD arrays, and we should continue to expect that to happen until we reach its target. And its target is going to be this imbalance, because one, it's a weekly bullish order block, and two, it's an imbalance. So once that's sufficiently traded, then we can start looking for reversals. Furthermore, we do have inflation rate announcements on Wednesday, so we can expect a lot of volatility once we get down here. But in terms of this order, in terms of looking for highs tomorrow, in terms of to trade off, we can look at this bearish order block. I'm going to look at the volume of it. We'll extend this to the right. And we're going to look at the midpoint, and you'll see the midpoint is already marked out with this level. So I'm just going to make that thicker for us to notice. I'll get rid of this and this. this is the very highest I expect price to trade if we're going to be trading lower tomorrow. So I'm happy for us to rally. Say we rally into London or rally into the Asian range, that's fine. But I'll be hunting for shorts with the expectation to run into the sell stops that are residing below here. We've got sell side liquidity residing below here and here now. And again, that fair value gap on the weekly, implied fair value gap. Let's go to the 1 hour. You'll see how we very consolidated on pound, not as clean as euro. You saw euro, just a nice swoop down. Pound's been a lot more consolidated, so we need to be careful with that. But in general, I wouldn't be surprised if we saw some kind of slight rally before we move lower. Let's go to the 15 minutes and 5 minutes, see if we can see anything. Again, heavy consolidation, really not ideal price action. Let's go 5 minutes. This is quite ugly actually. But yeah, moving into the new day, I'd like to see some kind of slight rally, and then I'll be looking for shorts to move lower into sell side liquidity below here, like I said, so long as dollar continues to find support. So in terms of going into your trading day tomorrow, you know, you have levels now that you can watch. If say dollar trades down through this level, and I'll show you this on the daily as well. If tomorrow dollar trades lower and trades through this wick, remember this is a wick we're watching. I'll go back to the 1 hour. If dollar trades through that and disrespects it, then we should start looking for these sell stops to get traded to. But until that happens, we should remain bullish because one, there's a bullish order block here. We've been continuously respecting bullish PD arrays. You can see failures to take out lows. This low never took out this low. This low never took out this low. A fair value gap has formed on top of the wick. Like there's continued support for higher prices. So that's why I'm looking for these relative equal highs to get ran tomorrow and that fair value gap to get traded to. If we're very bullish and they want to, you know, completely ram price up, they very well can. And that means we'll start targeting these relative equal highs and this breaker /4 hour fair value gap here. High, low, higher, high, and a break lower. So definitely something to watch out for tomorrow. And to be honest, euro looks like it's going to be the cleanest to trade tomorrow. Again, I want to see some kind of rally, selling above the open with the expectation to reach the sell side liquidity down here. But remember, this is only if dollar respects its PD arrays. So I hope this all made sense, guys. Make sure to join Discord. I've done a lot of discussion in there earlier today explaining my understanding and what I'm watching. Smash subscribe, we're nearly at 1,000 subscribers. And check out my trade execution video. That is going to be linked in this video. So that's everything, guys, and I'll catch you tomorrow. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well. And I want to start this video by saying thank you to everyone that's helped me reach 1,000 subscribers. Let's give ourselves a round of applause. And yeah, we're going to get straight into things. Hopefully you've watched yesterday's video. If you haven't watched any of this week's videos, I highly suggest and counsel you to go watch them because I'm not going to be going through everything. Yeah, I'm going to work my way from the weekly and work our way down as per usual. So you can see we finally traded up into the implied fair value gap that I had my eye set on up here. Traded right up into that very nicely. And now implied fair value gaps, like I said, ICT doesn't directly teach them, but he's mentioned them once or twice. And hopefully this week you've seen how they work, as in price will trade to these ranges that will act as fair value gaps, even though they don't necessarily look like a clear gap like here, for example. So now I hope that you know how to identify them and can start applying it to your work. But the fact that we've now reached this premium array, and what I mean by premium is that if we look at the range that we're trading in, we've reached a very high premium. Obviously the midpoint's here. So now we should start looking for discount PD arrays for price to trade to. So that's going to be everything below this 50% level that price may want to start retracing into. Now before I get down to the daily, we do need to remember that tomorrow is FOMC, so we should anticipate a lot of manipulation. Very low risk if you're going to be trading at all, preferably no trading at all. And yeah, just be careful in general, guys, because I tend to stay away from the markets on FOMC. So anyway, you can see there's that weekly implied fair value gap. We traded into this bearish order block right here. Here's the open off it. And then we traded nicely into that, got a nice reaction off it. And we also traded to a 4-hour PD array fair value gap that I drew our attention to in yesterday's video. So if you go and watch yesterday's video, you remember I called out this price precisely right here, and look at that. You can't make this stuff up, guys. So if you missed that video, go check it out. That's going to be the last time I ask you to go watch yesterday's video now. So we traded into that, beautiful reaction off of it, kind of just consolidating now, but let me go back to the daily and we can start looking at what we can start aiming for. So assuming this is a swing, as in we're expecting low prices, I'm going to be looking at yesterday's wick, so this range here, specifically the 50% level because that's consequent encroachment, and this is going to be pretty much the highest I anticipate price to trade. Now, like I said, it is FOMC tomorrow, so we can anticipate a significant level of manipulation and price may want to go past this. So in terms of accuracy, just to keep that in mind. but when we drop down to lower time frames, we can look at what lines up with this to potentially look for shorting opportunities on dollar with the expectation to trade lower. We have this huge fair value gap down here to reach for, but first we have the fair value gap that we created today below here. So we have some targets in general to trade to. I'm going to get them marked out for us. So we have this fair value gap, and then there's another fair value gap below that as well. But our first target should obviously be this one. And yeah, let's go down to the 4 hour and get a better look. So you see we came off that 4 hour fair value gap just as anticipated, came back into this range, and like I said, I'm expecting price to want to pull back up one more time and then break lower. So it's going to create like a nice swing. And almost create a mitigation block on this swing low. So again, fair value gap below relative equal lows. You can see that on the 4 hour as well, making it very high probability. And one thing to take note of is there is this huge fair value gap here as well on the 4 hour. So there's a lot of imbalances on the downside that price is going to make its way through. But because this is a daily fair value gap, this is going to be our focus point, as in, although we've got the 4 hour one, we want to see can price reach down into this one. If that's the case, then we can continue hunting for sell stops for the rest of the week, looking at these lows to get taken on potentially Thursday and running into Friday dependent. So yeah, let's go to the 1 hour just to get a better look at price action. And you'll see, again, we've just fell off that swing high. Look at that close, beautiful, traded lower. We have a bearish order block right here, this last up close candle, and you'll see that lines up with the 50% level. Now this is significant because this is where the change in the state of delivery happens. So we can anticipate this range up here to be acting as a selling point. Once we drop down to the lower time frames, we should be able to identify some kind of breaker here as well, which will again allow us to start setting up trade ideas. So let's go to the 15 minute, and you'll see there's a breaker here. We've got a high, a low, a high, and the price is delivered to the downside. So now I'm watching this last down close candle, and when you look at that, it just happens to line up with the 50% of that daily wick I marked out. So you're seeing how all these PD arrays are lining up with each other nicely, and I'm going to be looking at this range to potentially offer me shorts, but I will be waiting for a breaking market structures, and I want to see us turn around at this point. And again, time of day, it goes time and then price, guys. So let's say we reach here about London 3 a.m. then I'll be more comfortable shorting as opposed to some random time anywhere outside of that. Preferably with FOMC, if we're still in like this premium, as in above here, then we can start looking for short again into that daily fair value gap, and we've got some beautiful relative equal lows below here. And now here, let me just get these marked out for us. There's going to be a lot of sell side liquidity residing below here as a target for price, so we'll get that drawn out. But again, I don't know how volatile FOMC is going to be, and we may very well pass through this daily fair value gap and go straight into these relative equal lows. So there are a lot of targets in terms of downside delivery, but as you can see, we're already trading higher, so don't be surprised if there's a lot of manipulation in terms of returning to the premium before we see a significant break. And the reason it's doing that is, again, it's building liquidity for us to eventually grab on the way down. So yeah, that's pretty much what I'm targeting. Another thing I want to bring our attention to, which is quite interesting, is purge and revert. Now this is, ICT has a video called Purge and Revert. I have spoke about this before, but basically a purging is when there's a purge on liquidity. So this large expansion that we witnessed today on Tuesday, I consider that a purging, which means that after the purging, we should look for the next day. We should start looking for the low of this day to get targeted, followed by this low to get targeted. So moving to the new day, basically what I'm going to do is have this low marked out, and I want to see this get targeted at least in the new day, assuming this is a purging of liquidity. So that's what I'm watching moving into the Wednesday, and yeah, it should be interesting to say the least. So that's everything on dollar. Hope that all makes sense. Now let's head over to GBP USD. I'm going to start on the weekly here, and again you can see how we've traded down into this weekly bullish order block beautifully, and on the daily you can see price action. So we came down, traded into this fair value gap right here. One thing to take note of is that we traded to 50% level, so price failed to trade into it fully and then came off it a massive amount, whipping right back through the entire range, which was crazy, absolutely crazy day. But just as anticipated, this is a bullish order block as well. You can see we traded down into that, so perfect. So now again, if I'm expecting high prices on dollar, I'm looking at the 50% level of this the same way I am on dollar with the highs. Now let me tell you something. If let's say we trade through this 50% level and start trading lower, then that means I'll simply start looking for us to trade below this low and potentially into these lows. But I want to see us respect this for me to want to be bullish. So that's why I'm just keeping these levels marked out, because as far as I'm concerned, if we're going to trade higher, price should attempt to respect these levels. Another thing, this is an implied fair value gap, and that lines up with this 50% level. So again, because it's an implied fair value gap delivered on the upside, and we traded through it on the downside and upside, because this is a wick, right? We want to see this provide support. So moving into the 4 hour, again, I want to see a retracement back into this range, but I'd like to think that we can find support. So let's just take a deeper look, and you can see we're coming back down into this order block. We've just run out these highs. This is significant. Just taking out these highs. So now we're looking to see, okay, can we see continued support for higher prices? So long as that's shown, then we have this huge 4 hour fair value gap up here to trade up to above these relative equal highs as a beautiful target on pound. So let's just get that buy side liquidity marked out like so. We'll drop down to the hourly, and again you can see how these order blocks are getting traded through here, and we just took out these highs here. So again, moving into the new day, we have a breaker here. This is the last up close candle before the down move. We can drag that out. I'm going to make this one orange, get rid of that middle line, and this should act as a breaker, because again we've got a low, high, lower low, and price is broken to the upside. So I want to see this range act as support. There's an implied fair value gap between these two order blocks, so price may want to dip quite deeply into this range, and then I'd like to think it can offer us buys. Again, ideally that will happen around London session. You'll see that at 2 a.m. we do have some high impact GBP news. So let's say at 3 a.m. we are in this range. That might be an excellent opportunity to start thinking about buys, to run into the relative equal highs that are forming here. And again, like I said, that buy side liquidity and 4 hour imbalance above there, and a breaker. So it's looking very clean in terms of setups. Let me just get these midnight candles marked out. And again, with the purge and revert thing I was talking about, if you want to go and watch the video, just type in ICT purge and revert and it will come up. But assuming this is the purging of price and liquidity, we're looking for this high now to get targeted in the new day at least, and then it'll be this high and then this high. So we can have these levels now marked out on our charts as buy side targets, and then we want to be looking to buy below midnight open with the expectation to run to buy side liquidity. So that's what I'm expecting on pound. If you go to the 15-minute, you can see how these order blocks are stacking inside each other. That's nice to see. So I'm looking now to see, can it provide the support we need, like I said, to trade higher. So yeah, again, this is the lowest price I want to see price go. If we go below here and we start digging deeper back into this range, I will be a little bit more conscious, a little bit more nervous in terms of, you know, not wanting to see that happen. It can do it, and that's why we need to be careful, especially with FOMC and whatnot. So that's just something to take into consideration, but preferably not. But one thing I do want to state is that I don't think this low is going to get left like this. So I'm not saying this is the low of the week, but I am expecting a reversal at this point on the Wednesday, a Wednesday midweek reversal. So that's why I do want to see these highs start to get targeted, and that big buy side liquidity we have from last week. So yeah, it should be very interesting, but it's all just a matter of how we treat this this hourly breaker block, because like I said, if we trade through it, then it's like, wow, we're likely going to come back into this range and potentially trade into these lows, and it's completely different. So something to take into consideration, but definitely have your days marked out and the highs and lows of each day marked out, then we can see our price trades. So finally, last but not least, we're going to go on to Euro. We're going to start on the weekly on Euro. Remember, Euro's now traded into its implied fair value gap. Just tapped into it and we're coming off of it nicely. If we go to the daily, you'll see how we came off of that. Again, I'm watching the midpoint. I'm watching the midpoint of this wick. See how we trade to it. Again, if we trade through it, so be it. Then I'm going to start looking for these lows and the 50% level of this order block to get traded to. But that's only if we manage to violate this 50% level. So we can get that marked out, so we can see it on the other time frames. Like so. And again, there's an implied fair value gap here as well. And you can see just like pound, it lines up perfectly with that level. So you can see how different PD arrays are overlapping with each other. In terms of buy side targets, you can see we've already traded into this fair value gap on this wick here. and you'll see that this wick rebalanced with this wick. So so these wicks are touched. As far as I'm concerned, this range from this high to this low is traded through. So now I'm looking at this wick this, wick that. We'll get the 50% level off this marked out as a potential upside target. And then we also have this implied fair value gap just below it as well. So we might have a smaller day on euro. It really depends. But I'm going to get rid of this just so there's less on our screen. Let's go to the 4 hour. And again, we ran out these buy stops below here. You can see we're pulling back into the range. Small fair value gap right here. One thing to take note of though, euro hasn't taken out this high yet, which is interesting. So I'm waiting to see, because euro hasn't taken out its high yet, it can trade deeper, as in euro may want to go even lower and trade into this fair value gap below here. So again, we need to be very careful tomorrow, watching our price trades. If we find support here, brilliant, but don't be surprised if we come down into this level and then start trading higher into relative equal highs and a fair value gap right here. In fact, let's go to dollar real quick. Let me see on dollar. Yeah, I'm expecting a lot of manipulation tomorrow, guys, in general. So just be very wary. But overall on euro, as much as I want to see this provide support, like I said, the fact that we haven't taken out this high says to me price may want to dip deeper and potentially try and fill this fair value gap, whereas GBP is actually traded through this high, so the chances of it trading deeper than this low is less likely. But we'll see. So that's going to be everything, guys. I hope that all made sense. Very interesting day today. Personally, if I was you guys, I'd just leave tomorrow completely, purely because of FOMC and the amount of manipulation we're going to see. And you know, accuracy decreases significantly with events like that. But that's going to be everything, guys. Thanks for watching. Don't forget to smash subscribe. Don't forget to join the Discord. Don't forget to follow me on Instagram. I have a new Instagram at itsgbpbaby. And again, massive thank you for 1,000 subscribers. See you in the next one. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and I hope that everybody stayed safe today with FOMC. We had a lot of manipulation and a lot of price action, but we're going to start on the weekly, and you can see we've finally come off this level, this bearish order block that I was talking about. So I'm just going to quickly mark out a few things that I drew our attention to in yesterday's video. So I brought our attention to this implied fair value gap, and you can see we traded out of that, but I did forget to mention that this is a bearish order block as well on the weekly. So just as expected, we traded away from it, trading lower. We did trade higher than anticipated. If you watched yesterday's video, I didn't exactly call Tuesday's high to get taken, but you can see we swept above one more time and then traded aggressively lower, just as we wanted to see. So it's nice to see that price going in the direction we want, and we can, moving into the rest of the week, we can start to target now this discount fair value gap. Now price is very bearish right now, and you can see that I'm recording this at a time where we've already opened for Thursday's trading, and we've actually opened inside this fair value gap. So moving into the new day, I'm expecting us to fill I would like to think that we can start to fill this fair value gap and price will continue lower. We do have an inversion fair value gap right here now. Why is this an inversion fair value gap? I'll explain that in a second. So you can see our price delivered on the upside, creating the fair value gap, and then now we've closed below it on the downside. So if price does manage to return back up to here, we can anticipate some level of rejection. But to be honest, the fact that we've gapped so low moving into the new day, this is wild to me. Like, I haven't seen a gap this large before, which is craziness. So we'll drop down to the low time frames and have a look at what we can find. And as you can see, we have a crazy wick right here. Now, I don't know when this happened. If we go to the minute, you'll see that price just wicked up one more time and obviously took out a lot of sellers. I'm not sure what this is. I've seen stuff like this happen before. It's very weird. I don't really know how to apply it because even ICT hasn't really spoken about it. But yeah, that's happened. But yeah, if we go to the 4 hour, you'll see that we have this large wick. I don't think we should stress it too much. Price should continue to act the same. But I do think it means that price is likely going to continue with its heavy bearish action, because the fact that we gapped lower and done this massive wick thing is suggesting to me that price won't necessarily need to retrace before it continues lower. I wouldn't be surprised if moving into the Thursday we could just continue lower straight into the London session and trading deeper. So let's say we do that and price is to continue trading lower. I'd then be looking at this bearish order block, a bullish order block, sorry, right here, expecting that to be traded through. And then I'll be looking at these relative equal lows. So I'm going to mark out these relative equal lows below here. It does seem like a bit of a stretch right now for price, but like I said, looking at how bearish we are and how heavily bearish we are, I would not be surprised if price just ran into these lows. So moving into the new day, like I said, I'm looking for this massive daily fair value gap to get filled. And then we want to see what kind of bullish PD arrays are getting traded through on the downside. So we need to be paying close attention to that. Here's the hourly, and you can see how we traded higher again today, taking out Tuesday's highs before slowly moving lower, and then on FOMC traded lower just as expected. And then just now, like I said, we had this weird thing that's going on. You'll see a consolidation here as well. That should help provide resistance. And I'll just show you that like so. So this is a consolidation. And if we drag that through, and I'll make it white right now, again, this should provide resistance. So if price trades back into this range, we want to see this push price lower. Again, assuming we want to see lower prices. We have relative equal lows down here, which is why I've marked it out as a south side target. And you can see that we've gapped here as well. So I'd like to think that price may want to retrace slightly into that. And if that's the case, so be it. But overall, I'm expecting a lot more bearish price action. And tomorrow should be quite interesting. So I hope that makes sense. If you haven't watched yesterday's video, go and watch it just for more context on everything that's going on. But ideally, and first and foremost, I am expecting this daily blue fair value gap to get filled first. We may find ourselves consolidating inside it first, consolidating inside of it for a bit first before I'm looking for a break lower to run for this south side target. So yeah, it should be quite interesting moving into the rest of the week. Today was interesting to say the least. And yeah, we'll head straight on to GBP. So GBP traded higher just as we anticipated, and I'm going to just mark out what I marked out in yesterday's video with our expectations. So if you recall, I called out the 50% level of this wick to get traded to. Now we did go past it just a little bit, not a problem, but it's nice to see our price attempted to respect the consequent encroachment and then trade higher, just as we looked at. So if you didn't have that marked out on your charts, I'd definitely go back in and have a look and study that for yourselves. You can see our price came down to that level. Look at the volume, we respected it right to the pip pretty much. You can't get more accurate than that. And then on FOMC we traded higher, filling in this nice fair value gap. Now we have beautiful relative equal highs up here. I'm expecting that to get targeted in the new day, so we can put buy side liquidity up there. And then potentially these highs, again, depending on how bearish dollar wants to be. So to be honest, today's video, there's not much to say, purely just because I'm expecting a continuation to the upside. We can bring our attention to a inversion fair value gap right here. Again, delivery on the downside, then the upside. So that means the price does want to retrace back into this range. We can start looking for buys in this area. But like I said, price could very well just trade straight higher out of the London session. Like we don't need to retrace back into this range. If it does, it'll be nice because it'll give us a nice setup. We can start looking for longs. So if anything, we're looking to buy below the opening price with the expectation to run for this buy side liquidity and this fair value gap up here in the new day. Furthermore, on Thursday, we have interest rate decisions on pound. So again, we're going to be looking around 8 a.m. New York for for a setup to form. So let's say we do retrace right until 8 a.m. At least we know then we can expect long positions to be forming for that buy side liquidity target. Here's that 15-minute, and you'll see there's a bullish order block that's formed just on top of that inversion fair value gap. This candle here, one thing to take note of, you'll see how we traded down into this little fair value gap. I'll show you that now. So the fact that we've traded into this fair value gap and traded higher, price shouldn't need to come back down here at all. This bullish order block should be enough to provide support. So the lowest I really want to see price trade is into this bullish order block. So again, moving into the new day, I'd expect us to retrace lower eventually, and then I'll start looking for longs at this level with the expectation to trade into those relative equal highs I was speaking about. So very simple day. Yeah, very simple day. And also another thing to take note of is you'll notice that pound didn't make a low low, whilst dollar did make a higher high, and I'll show you what I mean. So you'll see that pound made this low after this low, so this is a higher low, whilst dollar made a higher high. So there was divergence happening as this happening. There was divergence happening as FOMC was coming into play, which is another way you could have got on the right side of the market with the expectation to trade higher, because it's showing that the pairs are showing strength. So that's something again for you to go and study. So we can finally finish on Euro. We're going to start on the weekly here. And you can see that Euro traded higher again, just as anticipated. I did state in yesterday's video that Euro may want to take out Tuesday's low. It didn't actually do so. It managed to show strength, just like pound did, which was nice to see. And then we traded aggressively higher, and we've also now filled in this massive daily fair value gap. So again, we can start hunting and looking for buy side targets to get traded to. So now we have this swing high up here as a potential target for Euro, and then we can look at the 50% level off this inversion fair value gap. Now this inversion fair value gap is pretty much the same as the ones I just showed you on dollar and pound. Delivery on the downside, we've closed above it on the upside. So as price comes back into here, we want to see that 50% level providing support for higher prices to run into this rejection block level and potentially these highs. Let's go down to the 4 hour. And you'll see price, again, we came down, traded into this wick, failed to take out the low, again showing strength whilst dollar was trading higher. So divergence right there, and then we traded aggressively higher, closing above, and you can see we're just kind of consolidating a little bit on top right now. So moving into the new day, what am I expecting? Well, like I said, I'd like to think that we can retrace, not too deep. We don't need to retrace deep into this fair value gap. We don't even need to touch it, to be honest. We very may well just trade into this fair value gap and then see a continuation higher for us to start running towards these highs. And these are relatively equal highs. We've got a swing high here and a swing high here. So that should be a nice target on Euro. And we also have PMI for Euro tomorrow, and high impact news on Friday as well. So the rest of the week is going to be very interesting. Should be quite fun to trade. Definitely looking for setups around the London sessions, and especially on GBP with their interest rate announcements tomorrow. So I hope that all makes sense, guys. Don't forget to drop a comment, drop a like, follow me on Instagram, and join the Discord. I am very active in there, and I'll catch you in the next one. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So today didn't actually go as planned, which is not the first, especially on weeks like these. Predictability and just accuracy in general does decrease a significant amount, so we need to keep that in mind. But nonetheless, we're going to continue forward and carry on looking at this week and how it's delivering. So again, we're still playing around in this implied fair value gap, which I drew our attention to a few times this week. So we traded back through here, and then if we drop down to the daily, you'll see how we gapped lower and then traded very aggressively right through Wednesday's trading when we had FOMC. So you can see that there's continued volatility, a lot of aggression. One thing I want to bring our attention to is the fact that we traded down into this mitigation block right here. So if I draw out the high off this, you'll see that we made the low at this mitigation block, which is quite interesting. And then from there, we traded aggressively higher, running towards Wednesday's highs. Another thing to take note of is that we traded into 50% off this fair value gap. Don't get me wrong, I did state that I wanted to see price trade into here, but you can see we quickly made that low at the 50% level, not even trading to it. And I'll just show you that more clearly now. So you see we didn't even trade to that 50% level before price started aggressively running higher. So yeah, not as planned, but at least we know we're likely going to continue higher moving into the Friday. And then obviously next week we can start fresh and look at the charts with a fresh mind and open mind in general. So where am I expecting us to run to now? Well, I am looking at these highs over here, especially this high from the 1st of March. So I'm going to get that drawn out for buy side liquidity as a target. And what I can do is I can make that like so. And it's just interest in general. We closed on a low, gapped lower as well, and then aggressively ran higher. So again, we can see bullishness, you know, being shown in the markets, and we should look at this a lot more logically. So on the 4 hour, you'll see how price aggressively traded lower, ran out this sell side liquidity below here. These are relative equal lows, so there's going to be sell stops. We grab those sell stops, and then you can see how price has broken aggressively to the upside. So if we are to continue higher, which is what I'd now expect, and it is a bit annoying considering yesterday I wanted to see us trade lower, but you know, when we're constantly seeing interest to move higher, and you know, we're bouncing off levels such as mitigation blocks like this, eventually we're going to have to stick to one side. And by the looks of things, I'd like to think that we can continue to push this buy side liquidity. If we are to trade higher, I am going to be looking at this down close candle here to provide us to act as a reclaimed bullish order block. Now, a reclaimed bullish order block is quite complicated. It takes time to get used to. And the reason this could be a reclaimed bullish order block, we have to wait until we trade into it, is because this order block caused this swing right here. So it's a breaker. We've got a high, a low, a higher high, and then price broke down. But this last down close candle is what caused this big movement up. And now that we've traded through that aggressively on the 4 hour as well, closing this gap completely, and we're expecting higher prices, and we're expecting a run to this buy side liquidity, that means when price comes back down to this bullish order block level, I'd like to think that price can turn around at it and trade higher. A good example of where a reclaimed bullish order block has been showing support is here on Bitcoin. I did make a video on this not too long ago. You guys can check that out. I made it on Sunday. That's in my videos. But I was speaking about a weekly reclaimed bullish order block that I wanted to see get traded to and price react off of. And here's an example of that. So you'll see there's a bullish order block here that caused this big swing. And when price traded down into it, we had a nice reaction off of it. So exactly the same logic. I'm just applying it here on the 4 hour on dollar. So that's why I'm watching this level now. Obviously, we have a nice fair value gap here and potentially down here. But like I said, if we're going to see higher prices, we want to see this point of accumulation, which was on the buy side, continue to be a point of accumulation. So we can actually drag out the volume of this area, pull it right through, and we can watch our price trades in this in the new day. On the 1 hour, you'll see I have my daily dividers marked out for us, and we can start to see how the week has been delivering. So I'm just going to mark out the Sunday opening, which is very significant. We'll make it red, make it a little bit thicker. And then you can see our price traded lower on Monday, running higher. And then on non-farm payroll, as we know, we traded aggressively lower. And then as we moved into the Thursday, we just ran right back into the range, taking out anyone that was short. And like I said, I do think it's likely that we're going to start targeting Wednesday's high and running into this buy side liquidity as well. Obviously, here's that sell side liquidity we grabbed right below these relative equal lows here, here, and here. We gapped down to grab those stops and traded down into that mitigation block I was talking about and broke higher. Now, another reason I believe we are going to have higher prices is because we do have a break in market structure here. I'm watching this high. So if we look at this high, and if you've watched my backtesting videos, you'll know I always mark out things like this when we see a break in market structure. But you'll see that we've broken to the upside. Prices came down, found support on top of this level, which is a breaker. Why is this a breaker? This is the last up close candle before the down move that then caused this big move. This is quite a complicated episode, guys, not going to lie. But if we drag that out, you'll see our price traded into that. Volume remained above the Sunday open, so it's showing support. And then we've seen clear expansion and displacement to the upside. So as far as I'm concerned, price should continue to show this kind of bullishness moving into the new day. So as we move into Friday, I'm going to make this orange for us. I am going to be watching again that reclaimed bullish order block. It's not reclaimed yet. We have to wait for us to trade down there. But as soon as we come down there, I'd like to think that London session may offer it us. I'd like to start looking for potential longs with the expectation to run into Wednesday's high and obviously that high I spoke about on the daily as well. One thing to take note of though is, like I said, you can see how my accuracy has been significantly weaker this week with FOMC, understandably, and that's why moving into tomorrow, if we are going to be thinking about taking trades, we do need to be extra careful and have extra risk management taken into account. But yeah, let's go down to the 15 minute. Again, you can see a nice break in market structure. We came back down. Look at that beautiful respect of that breaker, and then price traded higher. Found support again at that point, at that break. This is where the change in the state of delivery happened. And like I said, we should now be hunting for some kind of buy side liquidity, and there are going to be a lot of stops residing above here. As we were falling during FOMC yesterday, I was looking at these highs and they do look very relatively equal. And that's another reason I wanted to bring our attention to it, is because that's where there's going to be stops residing. There's going to be a lot of retail and uninformed money with their stops above there that price is going to want to snatch before thinking about any kind of deeper retracement. So I'm just going to get this marked out as well, and we can use this as a target moving into the new day. But like I said, the lowest I want to see price trade ideally is going to be that bullish order block down here. You can also see there's a nice 15-minute fair value gap here as well. So like I said, this may make the low of the day, but we do still have a bit of Asia to trade through as well. So we do need to be considerate of that. But overall, I like to think we can come down, offer us buys, and then like I said, run into Wednesday's high, and potentially reach for that daily high. So that's my expectations on dollar. Very interesting week. I think next week will be good as well. Now we can head over to GBP and take a look. So I'm going to start on the weekly here on GBP. And you can see obviously we've had continued down action after what we saw on dollar. And that means now I'm looking for this level to start getting traded into. There is an implied fair value gap right here. You can see there's only up delivery. We have this up close candle with volume. So I'd like to think that we can start pushing into that in the new day. Whether we take out these lows, any of these lows below here, again, it depends on how bullish we are. But after seeing how much movement we've had this week already, I wouldn't be surprised if Friday was a little bit more quiet. Although we do have high impact news. We have the Bank of England interest rate decisions and inflation rate. So if we do bypass this fair value gap, then it obviously will start running for these lows here and here. But if we drop down to the daily, hopefully we can get some more clear targets marked out. So again, you can see the break. We came back up. Where did we trade into? Bearish order block right here. This provided resistance. So we traded into that. Volume, again, look at the volume of the blocks. You can see our volume remained below the 50% level, pushing price lower. Again, causing this to become a bearish order block. And like I said, I am going to be looking to be going short on pound as we trade higher in the new day with the expectation to then trade lower. To be honest, this fair value gap I marked out on the weekly is probably going to get traded through. So I'm going to mark out some lows that I want to get targeted instead. For example, this swing low right here for sell side liquidity. We'll make that bold. And then potentially down here, again, depending on how aggressive price wants to be. I am also taking a close look at this wick. This is now a bearish order block. So as price trades back into this range of this wick, I will again be looking for potential shorts on pound. We'll make this blue. And then once we drop down to a lower time frame, we should be able to be more specific and more precise with our expectations on where prices is likely to short to. So let's go to the 4 hour, and you'll see we have a slight breaker. We have a high, we have a low, we have a higher high, and then obviously price is now closed and delivered to the downside. So this last down close candle right here, this is where we should be thinking about shorts from, because it should provide resistance and act as a breaker. So I'm going to keep this drawn out. And then on the hourly, you'll see that I've got my daily dividers again. I'd like to think that this can make the high of the day again. Looking for shorts within that for us to then trade lower into that sell side target I just mentioned, and potentially down here. The reason I'm not sure as to where to target on pound right now is purely because there's no clear fair value gaps on a daily basis until like all the way down here, and that's unlikely to happen in one day. But I do think that lows are likely to start getting targeted. We can check the 4 hour, but there's no clear, imbalances to trade to. And price is always either trading to a new high or an imbalance. And ICT stated that multiple times. But it'll be nice to see what potential shorts will be able to form. Another thing we can take note of as well is that if we look at the range of today's price action, so we've had a very big bearish day, we can actually split it into quarters. So I'll get this fair value gap Fibonacci I have preset, and if you look at the 25% level, you see that marks that levels up nicely with that breaker I was talking about. So again, price finds resistance. Well, price tends to use these levels of ranges to move to the next one. So again, this 25% level is supporting the idea that price may find resistance there. If we do say trade through it, I'm probably just going to switch my charts off completely and just wait till next week, because it would be a little bit crazy to see if we like whipped right back into the range. But I do highly doubt that. And again, why? Because we've closed now. We have a close below Tuesday's low, like a clear close, breaking market structure. And again, we've left this fair value gap up here as well. I'll show you that on the daily. So this order block up here, the way that we've left it, again below that 50% level and close lower, this is all hinting to me that price should seek to trade lower. Furthermore, on the 15-minute, we have a fair value gap right here. This complements nicely with this 15-minute fair value gap on dollar, so it'd be nice to see if we can trade down into that. Whether this happens during Asian range or London, I'm not really sure, but regardless, at London, I'll be looking and expecting some kind of shorting opportunities with the expectation to get into that low I was talking about. So yeah, very interesting week, and I think tomorrow will be interesting as well. And obviously 3 a.m. New York is when I'll be in the GBP charts hunting for potential setups, which is a very typical time as well in the London session for when we witness either a reversal or a continuation. And that's something for you guys to study, but I can talk more on that in a later video. Finally, I'm going to finish on Euro USD. We can start on the weekly there as well. Again, continued downwards price action. There is a weekly fair value gap here implied that I would like to see Euro start to trade into, so we can get that marked out like so. Once we go to the daily, again, you can see how we whipped right back through the range. Honestly, days like this, like price action like this, when we see the whole range of a day, and what I mean by range, I mean like the volume, it's very difficult to predict, and very, you know, it can be offsetting, and it does make sense for them to do things like this, especially in times of times like now with FOMC and a lot going on around the world in general. So definitely don't kick yourself about it, and just keep moving forwards in general. But yeah, we have relative equal lows below here, here, and here. This is that weekly fair value gap, which is placed nicely in that bullish order block. We are likely going to obviously retrace back into this range a little bit before I'd like to start seeing lower prices on euro. So here we have a fair value gap on euro. Euro hasn't been quite as weak as pound, which is quite interesting. We might see more consolidation moving lower. On the 1 hour, let's take a look. Here's today's price action. And yes, I'm pretty much expecting the same thing in terms of seeing some kind of retracement higher. And then, you know, shorts into these relative equal lows below Tuesday and Wednesday. And these are very relative. So like price is very likely going to want to draw into these lows. So again, in terms of looking for trading opportunities, we want to try and be short in above the opening price of Friday with the expectation to trade lower. Let's go to the 15-minute just to get a better look. Now you'll see this bearish order block right here. Preferably price doesn't take out this bearish order block, and the reason for that is because I'd see that as a break in market structure if it does. So instead I'm looking at this fair value gap right here on the 15-minute. So on each pair now I've showed you a 15-minute fair value gap which I want to see price trade to and turn around at. It doesn't have to, but ideally it will, and that will offer us our setups for the day. So this is the 15-minute fair value gap I've got my eyes on euro, with the expectation to short down into these relative equal lows. GBP is this fair value gap right here, and then dollar will be this fair value gap right here, but obviously we're going to have to wait and see. So that's going to be everything, guys. I hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the Discord because I am active in there, and follow me on Instagram at itsgbpbaby. So thanks for watching, and I'll see you on Sunday. Peace.